tracks because you're going to have your vector 1, 2, 3 right out of the box. You might get a pivot laying there, yesterday's tracer. Some things will be laying there, ADR low. Might be laying right there and give you an idea that, hey, the stop hunt should stall right here and the reversal's there. And then again, you have your 1, 2, 3. You may only get 2 levels in this example, right? If he comes out again and issues a V, I expect this. That's good. Now the expected move is this and reverse. Back into the range. What's the range? High minus the low divided by 2. It's going to be right about here. If it's a 300 pip move, you can expect about 150 pip retracement. Okay? The V could hit the mayonnaise. It could hit the watermark. Okay? That's the cycle. And it's the opposite cycle for the way down. Okay, now keep this drawing in mind. Okay? Now let's look at a chart. It's kind of funny. I drew it like that. All right? You have what we call a 33 trade on the last day. Okay? And I'm going to show you that. The 33 trade is a very aggressive day that guarantees a reversal of about 50 to 100 pips minimum. Here's why. Okay, isn't this pattern not only the intraday pattern, but it sets the beginning stage for the week? Right? Back into consolidation, vector 1, 2, 3 to the low. Morning star formation around the mayonnaise can be construed as a V bottom or a W, depending on how you want to look at that. Right past the mayo. Why would he come down past the mayo and close aggressively past the mayo and then snatch it right back in 1 bar? Because it works. Hey, Wayne. It works because when they close below that, there's 2 candles below this, right? A retail trader would sell here and here. Some people say, oh, on a break plus a close below the mayonnaise, I take it. Some people say when I get a full bar below the mayonnaise, I take it. Isn't that funny how he did both? He issued a break plus a close and a full bar below the mayonnaise. Then he immediately stalled the brakes for 15 minutes, and then 15 minutes later, everybody is freaking stuck because 1 bar took it all back. Do you see that? Do you understand? It snatched it away from the traders. Okay? Our entry is in here after the morning star formation, comes back to the mayonnaise, or a bar later in here. That's okay. And this trade moves nicely in, then it bounces, and it does what it's supposed to do to finish out the day. 1, 2, 3 to the high, end the day and chop, and then drift back into consolidation. Okay? Then what does he do? He does exactly like he's supposed to because we knew it was coming. Vector, tiny 1, 2, 3 to the low, 3 swipes to the low, issues a hammer, snatches it away, comes right back with a second leg, and then this is your 33 trade. Okay? I'm going to explain to you the 33 trade. The last day of the 3-day cycle will issue 3 intraday levels of rise. Okay, write it down. Or mark the tape. Whatever works for you. The last day of the 3-day cycle will have 3 days of intraday rise. 3 levels of intraday rise. I messed that tape up. Let me do it one more time. The last day of the 3-day cycle will have 3 levels of intraday rise. Okay? With little stutter consolidations. 1, aggressive off the low. 2, 3. Hit the stops. Notice the pins turned over. See the pins on the top side? It's day 3. It looks like stairs, right? Stairway to heaven. Man, it's like stairs. I see it, Steve. Do I know from the right part of the cycle? What time of day is it? How's his behaviors? Are you at level 3 rise on the last day? This is called a 33 trade. The reversal is imminent. You can sell on the hammer back into the range. First target's the water, second target's the mayonnaise. I promise you'll get it. Almost every time. Why? Think about all this money everywhere in here, right? Market makers had to buy off of all the traders. They had to buy off of all the traders, buy off all the traders, buy off all the traders, buy off all the traders. Right? They're running out of cash. They're running out of money right now. It's getting a little low. The last day the 33 trade, you ever heard of the term pump to dump? They're pumping the price on day 3 of the cycle to create, oh my gosh, look at this uptrend, I got to grab some of that. That mentality that is everywhere in the retail trader's world. Man, look at that euro. I'm so sorry I missed that. Buying, buying, buying. They pump the price to buy from the traders, become net short heavy at level 3, day 3, and then correct the price and come out net positive in their cycle. Market makers buy from the traders or sell to the traders on an aggregate, with the last level of the cycle being the most aggressive and heavy buying or selling. That behavior allows them to come out of their longs or shorts in profit. Okay? So now, this is exactly what I just drew for you in my little sketch. It's going to be there over and over again. Can they reset back to the mayonnaise and continue up? Yes, because I don't know what the seasonal target is for euro, and nobody else does except them. I don't know what the quarterly high is going to be in GBP. But I can tell you that at those price points, when it approaches the yearly high or quarterly high, a sucker takes a break of that long. And I'm going to show you in a chart coming up exactly what I mean. Okay? All right, so we're still good. We're understanding the trend, right? Here we go. Next slide. Identifying where you are in the count will simply help you project the next move. You've got to identify the peak formation to know how the cycle's anchored and where you are in it. If a double peak formation appears on a higher time frame, all I could say is lights out. You will make some money. Okay? Here's what I mean. Okay, this is the pound that took 3 months to set up. Okay, think about how crazy that is. 3 weeks, 3 months, all the threes in there. Look at the daily chart where it formed a high. Let me pull my pen. Here's the daily chart where it hit the high for the first time. That was the seasonal high. From September, October, November, right? It hit the high. It then had 3 levels of drop. And then it went back 3 levels of rise, and it came right back to the seasonal high. I promise you there's breakout traders that put their orders all up in here. They put big fat pendings. They were aware of this, and they went in there and they issued a big fat spike to the high and picked up those orders. Okay? They came near it again. Just so happened to be the Asian session where you're seeing this activity in here. Right here on the 15-minute. Have a looker. See it? Here's the 4-hour. November high holds. Market makers pinned it. They made the second leg of the M. There's the first pass on a 15-minute. Second pass on a 15-minute. Third pass on a 15-minute U.S. session. These guys are so freaking greedy because the bigger chart traders make up small institutions and hedge funds. They went back again because these guys were looking for the break. These guys were looking for the break on the daily above the high. Do you see how they went back 4 times, 3 times, once in London, or twice in London, once in the U.S., and once in Asia? Think about how crazy that is. If they pass up there 3 or 4 times, I told you, if they make that many passes at a price point, it's lights out. They made the swipes at the high all those times because there's a ton of money sitting there. Do you see the 1 hour is crystal clear? Yes. Look in here at the 1 hour. There's the pin to the high. Come near it again, miss it. Come near it again, miss it. Boom, boom, boom. And there's actually a little tiny more pass right in there. Notice the outside structure. The outside bar forms the high of the cycle, but none of the bars penetrated. That is a sell all day and twice on Sunday if the market's open. Okay? So understand. Boom, 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 game over. If you have an M formation on a larger time compression, such as this one, that took 3 months to form or 2 months to form, the correction's imminent, man. They will correct the chart to get paid. Okay? For 3 months, can you imagine this, man? Somebody took that break long at the railroad tracks in October, November, right? November 4th, that week. They were all happy. They probably thought they got a great breakout trade above the seasonal high. They were probably ready going to buy their wife a new Lexus for Christmas. They were all excited. Market makers snatched it away for 3 months right through Christmas and didn't come back until February. Man, if they were running a hedge fund, they had open float for 3 months, had to pay swap every day. Do you know how crappy that is? I'm sure it ruined their Christmas. I'm sure they lost their bonus. Somebody was trapped long there. For them to come back to the level and pick up more orders 3 times? Yeah, somebody said she got a Hyundai instead of a Lexus. Coal in her stocking. Don't you see how dirty this is? That's why the regular technicals don't work. The breakout traders break above the seasonal high, break below the seasonal high. If they break above the seasonal high, you got to still get the right signals in the formation. Trading above and below the seasonal highs is a sucker's game. Don't do it. Instead, look for it to settle in and make the counter and take it back towards the seasonal number. Okay? Like we did in this example. This was good for 150 pips minimum at the seasonal high, okay? Okay, so the trend. How do you figure out the trend? It's the anticipated directional move needs to line up with the peak formations. It begins after the stop hunt. After you see the stop hunt, aggressive move, vector candles to the high, it sets in, pulls back, goes again, that's the peak formation. That's the highest point on the chart. It could be the highest point on the chart for the week, and you also have the peak formations intraday, which is the V tops and V bottoms. The trend move in Forex lasts 6 to 8 hours. The directional move is slow and steady. It's with all their money committed. Obviously, if level 1 is identified, the trade's going to offer more pips and can be converted from a spot to a swing trade. Let's say you see a peak formation low and you get in something, it looks good, and you're jacked up, and you're like, man, I kind of like this trade, and you scroll back and look at the 1 hour chart. You notice, man, it's been dropping for about 3-4 days. It settled in, it chopped around, it made a second leg. That looks like a big multi-session W. You're up 50, 60 pips. Lift your take profit, adjust your stop to break even. Convert the spot trade to a swing. Not everybody is suited for that, and that's okay. If you're not, take your 50 and look for another setup tomorrow. If you are, and you want to start taking swing trades, that's okay. But understand the swing trade lasts 2 to 3 days max. That's why a lot of times these guys take swing trades on Monday and they hold it and they're up 200-300 pips and they move to break even and never trail. And then by the time Friday rolls around, they come right back to the same level and end the week for no net change. And they had a 250 pip open float positive and they end up with a +5 or +25. That, my friends, is a crime. Okay? I'll talk about how to handle the stop losses in all conditions. Okay, look. Will all the time frame always line up? No. This is a retail trader's trap. Don't get caught by the market maker, man. You sitting here waiting for the 1 hour, 4 hour, all that shit to line up? That's a retail trader's trap. Okay? All right, I hate to keep asking this, man, but can everyone hear me? Is it just certain people are falling off? Okay, sorry. All right, thanks, man. Okay, thank you, Mac. Thanks. Okay, thanks, guys. All right, look. You got to have an open mind and trade in both directions and not be afraid. If he shows you stop hunt high, you're a seller. If he shows you stop hunt low, you're a buyer. Just be cognizant of where the peak formed. How far away are you from the peak? Is there profit to get back to the peak if you trade against the anchor spot? Okay? That's how you handle the trend. Now, a market maker uptrend can be labeled as such. WVVM. The counter trend back towards the peak is ill-advised on V1. This is V1 right here. First day of the reversal. The straightaway trade occurs here most often. Okay, I'll show you a picture, don't worry. Okay, if you're writing the slide, I'll give it a second. This is an important slide, by the way. This is what I mean. Day one of the cycle, a big fat W comes in at the tracer. I expect a rise. The next day, they issue 2 pins to the low in the shadow box. My gosh, it couldn't be any perfect. Here's the low. They cut it in 3 swipes, vector to the low. They end on pins right here. They make their move up. This could actually be construed as a big W. That's okay here going into the session. But here's your stop hunt low. What do you expect? Day 2. All right, one more day of rise. I expect them to stop hunt low right out of the box and rise. VW, VVM. The reversal's imminent. There's the railroad tracks to the top side. There's level 3 chop, level 3 chop, level 3 behavior. I know it's coming. Okay, do you see? Market makers took their money back against the trend very aggressively, I might add, too. Look at that. Look at these candles right here, man. Over, and you got out of that trade in minutes. Level 3 is the 3rd day of the rise and the chop. Okay. The market maker downtrend can be labeled as such, MAAW, only because I can't make an inverted V on typing. I don't know how to do it. If someone knows how to do it, email me. The counter trend is ill-advised at A1, the first A of the cycle. Why? The straightaway trade appears most often out of this part of the cycle. I don't want you to get jammed. When you start knowing how to pick off the straightaways versus the counters, that's okay. You're going to get more proficient. But for the new guys, it's too easy, man, to start chasing crap and making up reversals and things that aren't there, okay? Just trade the easy stuff. Terry, every chart's 15 minutes, man. Always, unless I say otherwise. All right, look. M, anchor point formation. V, they come right out of the consolidation. Aggressive move. Expecting this. We expect one more. Pins to the mayonnaise is an easy pick-off. Then they turn the cycle around and make their money against the trend. They come all the way back to level 2. How'd you do that, Nelson? Email me. All right, somebody knows how to do it. That's the cycle. Okay? MAAW, WVVM. That's it. Just remember that. A 3-day cycle. 1, 2, 3. I'm out of cash. I got to reverse. It is beautiful to behold. I joke around like I have these pictures put in a nice frame with a matting around that's on my wall, got a little light. That's my Mona Lisa, man. Why would you ask if the class is recorded or live? You know I'm here. Seems like I went down. Did I go down? You guys still there? Yeah, okay. I don't know what happened. Almost like someone took control of my screen. Probably got a market maker in here. Okay. Very weird. All right, here we go. I said this, will all time frames line up? No. Don't get caught by the market maker. All right, look, midweek reversal. This is a 4-hour chart. Same thing applies. Same thing. One more swipe at the stops, end the week. Trap the traders long to go into Friday, come back, complete the cycle, back to the mayonnaise. Okay? The same thing over and over and over again. I promise you, when you start identifying this stuff and go back in the charts, you're going to laugh at yourself. It's been there the whole time. Okay? Think how many times you fell for that. Okay, let's talk about candlesticks. Candlesticks at the right context or right time of the market are invaluable for identifying what's happened. Understand that the candlestick is the footprint of the market maker behavior. It's your job to identify the market condition. Candles in the wrong market condition, to me and to this group, are meaningless. Certain candlesticks can be expected at the high and low of the day, and they are as follows. Spike candles, hammers, inverted hammers. Spinning tops, doji types, railroad tracks, high test, low test candles. Now, I'm not talking about gasoline and the cheap gasoline. Okay, I'm going to illustrate every one for you. I haven't left you hanging yet, have I? Okay, here we go. The vector candles. This is a term that engineers like to use. Zaim coined it and donated it to the group. Some people like it, some people hate it, but nevertheless, it just means a candle of magnitude, length, and direction out of nowhere. It's like when you sit back and look at the chart and you go, that don't look right. It just came out of nowhere. Big spike out of nowhere. 3 candles out of the box. That doesn't look right, man. Something's wrong. We know the chart should be a slow, steady rise or a slow, steady fall, but if we get 3 burst candles or a burst in price, something's wrong. The burst in price can come in one push, all inside of one candle. It can come in 3 candles, it can come in 2 candles, it can come in 22 candles. I'm going to draw it for you. Okay? The retail traders have been taught that this is called momentum candles, and they couldn't be more wrong. This is the candle that you say, oh, momentum in the marketplace, and gets you to chase the break or the wrong direction. It's simply an anomaly on the chart that would look like a breakout. It's like, oh man, that's breaking out of nowhere, it's moving. That's a vector candle. And it appears for no reason other than to get things moving tonight. Market maker comes on duty, and he's like, all right, how are we going to start this off tonight? Let's hit the stops low and rise. Vector 3 times to the low, bam, gotcha. The vector candles usually form the low or high of the day on the first leg of the reversal. Now, if it's a V bottom, obviously it's going to be just the first part of the V. But on a W, it's going to be the first leg of the W to form that. It's going to be the first leg of the M. Here's what vector looks like. Okay, what you do is, I told you, always measure the initial low of the day, because that's what these guys are counting. This is your break. This is your first candle to pierce the low, the initial low of the day, right? It doesn't say I love you. It's the initial low of the day. The first candle that pierces the initial low of the day is to get things rolling, to start the stops, to trigger the stops, to get the traders to take, right? Then what do? He spikes it. He hangs around for 30 minutes or so. He pushes it and breaks the low again. Hangs around for an extra 15, and then taps it out to finish by breaking the low again. I'm going to illustrate this for you in a minute, nice and clean. I'm going to talk about the blue box. Yes, just absorb the concepts right now, my friend. All right? The 1, 2, 3 to the low is the vector pushes an extension of the low or the high. All right, let's look at it from the high side. Here it is again. An extension of the high. Steve, I only see 2 candles there. I understand. 1, 2 pushes can be contained inside of here, and the third push can be contained inside of here. But I promise you, measure this. This is, anyone want to take a stab at it? 25 to 50 pips above the initial high of the day, depending on the pair that it came from. Okay? Now, that would be an M top. Absolutely correct. Look, spike to the high, pull back, hit it again, just take it out barely, close below, and then shift it away to trap everyone up in here long, and then game over. Sorry about your luck. Okay? M top. Notice how you have a big outside bar that eats the whole structure up, and these bars trade inside and then shift away. Very important to note. V1 on the chart is not the same as Vector 1. Absolutely not. Vector is only to understand the speed and the movement of the stop hunt candles. Vector, let me see if I can clear this up. Vector identifies stop hunt candles. V1 is a stop hunt low rise. V2 is stop hunt low rise. Right? A1 is stop hunt high drop. A2 is stop hunt high drop. All right? See if I got that right. I know you guys are telling me it's going on in other pairs right now, but I don't want to talk about it. I want to focus on the material. Okay, look, this is very important. Candles represent, candles, bars, whatever, where price has been. When the candle paints and closes, the damage is done. Market makers got what they needed. So when they issue a pin, right? Think about this for a minute. Okay, I've been talking about this. Everyone keeps asking me, what is a pin? When you see the pin, when the pin is issued, the money is grabbed all in here. Because after all, this was a solid candle that started out like this, right? And then what did they do? They closed it like this. And the pin's issued. When the pin is issued, they've got the money. So you have to ask yourself, okay, the pin's been issued towards the high. They came out of the box, 50 pip channel. They cut it in 3 swipes. They ran that candle straight up and pulled it all the way back and snapped it back and closed way below the high. The damage is done. They grabbed the money they needed. That's what you have to understand. Okay, now let's go over the high-low board and understand how they extend the high or low. I made an example of how they extend the high. Okay? Here's what happens, okay? We know that they will extend the high in 25 to 50 pip increments. The activity takes 30 to 90 minutes when the high is reached. Okay? So here's what happens. The initial high is 6160. Sometime between 1 and 4 a.m. New York time, Eastern. The times vary because they don't want you to figure it out. The initial high was 6160. Craig's group should easily pick this stuff up. 6160 is breached immediately with an aggressive move, and there's a little bit of a pullback in here. Okay, 1, 2, 3. The initial high is extended from 6160 to 6184. 24 points. Okay? They quickly pick up the contracts and get out of that area. Price would drop down to like 6170, 10, 15 pips off the high. So if you're watching the board, you'll see the number change from 6160, and in the blink of an eye, it'll swipe 20, 25 pips. Depends on the pair. In the GBP pairs, the first swipe out of the box is about 25 pips. They make the one swipe out of the box about 25 pips if they know they're going for 50 pip stop hunt. Think about it. If it's in 3 swipes, we got to break the 50 pips down, divided by 3 into 3 swipes, right? The swipes are not equal. The swipes are a trick. Part of the psychology of 3. So how do they do that? They'll make the first break 10 or 15 pips. On this example, I'm sorry, I did 24 pips. 10 or 15 pips, right? They'll hit it quickly. Bam! 10 or 15 pips right out of the box. Gets the ball rolling, gets everybody excited. They'll pull back and they'll hit it again. If they did 15, they're going to do about 8 on the next hit. Then on the very last piece, up in here, they will tap it 3 to 5 pips. The 3 to 5 pips plus the spread is just enough to annoy the shit out of you and take your money away on the stops. And it's just enough to pick up the pendings if they're structured on the other side. Okay? Now, they quickly pull away 10 to 15 pips off of that number, the new high of the day. Right? You have your initial high of the day, 61.84 becomes the high of the day now. They pull back. Immediately 15 pips to trap the long holders and to evaluate and see what they got. They turn around and make the second pass from 61.70 right back to maybe 78. With the spread, it's 81. Not quite to 84. Why? If they go to 84, 85, it releases the traders. So they'll hold right around 78. Right up in here. The traders that are long here are still stuck, and they're doing the, oh, I got it, baby, it's going, it's going, it's going, and hold on. It comes in as a near miss of the high. Now, variation on that could be the pin goes above 84 and comes right back down and closes here as a hammer on the second leg. But they'll hold a number at 78 by 81. 78 by 80, 78 by 81, 82. You'll see it. If they're working the spread widens and it becomes 78 by 86, 78 by 87, but the 78 doesn't move. That's a hold. The sell side is open, trying to pick up the orders. That action traps the retail traders, gets them to fall for the crap and validate their patterns that they've seen in the textbook. Okay, so now, sometime between 1 and 4 a.m., they're going to break out of the box. Let's say our bias is short. Let's say we have peak formation here, and they come in, consolidate. They had 3 levels of drop. 1, 2, 3. We expect the same behavior tomorrow. They come out. They issue vector candles. Understand this swipe can be one big fat railroad track and then fall back like this in 2 moves. There's your entry, or there's your entry. It can just be 2 big fat candles straight up, one straight down. It's variations on the theme that you have to understand. The job is to get the traders to fall for it. That's why it's mixed all the time. It's disguised as different things. So now, if you're watching the big board, the high goes from 61.60. All of a sudden, you'll see it blink. Bam, they hit it. It goes to like 61.72. Bam, they hit it again. 61.80. And then they tap it 4 or 5 pips for the last time 61.84, the high is formed. They quickly get off of there and drop down to 61.70. Traders that don't know anybody go long here on the pullback. They go back towards the high but fail to break the high of 61.84. They perhaps open the spread and go 78 by 85, 78 by 86, but the high holds. Identified by the way the candle closes, it ends in a hammer or ends in a spike or a pin. They then shift the zone away from the higher level traders, our entry is here. Around 61.78, 61.75 with the spread, you grab yourself a nice position. 61.74 would give you a 10 pip range to the top of the formation. Add a few pips for good measure for the stop. I'll talk about that. There's your entry. Stop loss is right here outside the range. We'll talk about this. Still, stop loss. Just understand that's where it goes. Okay? When the high of the day holds after the things that you need to see are there, okay, let's see. Let's back up now, okay? 5 p.m. Do I got to do this? 5 p.m. high-low reset. Boom, boom, boom. Trade in the range. Widen the spread. Between 1 and 4 a.m., you have your vector times 3. 1 push, 2 push, 3 pushes to form the high of the day. Same for the low of the day. It can be 1 candle straight up in 15 minutes, an aggressive move towards the stops. It could be in 3 candles. It could be in 7 candles. When they do it in multiple candles, this is how they do it. They'll go up, break the high, trade sideways within it. Hang out there, hit it again. And then maybe tap it again. And then reverse. Same thing. The only difference is they added 45 minutes in the middle to piss you off, confuse you, because they were accumulating contracts and seeing what happened. Okay? They could do the second candle, not take out the high. Let's say this candle was like this, and then trade inside here, and then hit it one more time. The last tap is always mild. The last tap is always mild before they make the reversal. Why? Just enough to not spend any more money than they have to, but to pick up the stops and grab the orders on the other side. Understand, there's some type of money sitting right here, right? So when they come back in, they just go up there like this and grab it and turn it right back around. And they say, sorry about your day. They really don't even, not that polite. They don't even say that. But that's how they grab the orders. Now, you get the revert. Our entrance is here. They shift the zone in 1 bar, 15-minute, nice 15-minute drop. All these traders in this structure are jammed now for the cycle. When they shift the zone in a big 25-pip move, that causes the panic, the lift the stops, the quick turn on the news. Where's CNBC? Let me kick my dog. I can't believe I'm down again. That causes all those emotions and behaviors, and it makes you start to think irrationally. Okay, that's where and how they handle that to make retail traders do that stuff. To make the bad decisions, to lift their stop loss, to do stupid things with their equity. And the bottom line is they end up pocketing it. That's their job. If you understand this is coming, then your job is to wait for this structure to develop and trade it. If you understand the second pass is coming, then your job is to have the perseverance and the patience to wait for the second pass and trade the second pass. I can tell you that if you become proficient identifying the M's and W's and wait for the second pass, you will be 10 out of 10 for the week. The discipline lies in waiting for that, and I can't teach you that. I can teach you what to look for and how to see it. I can't teach you to sit on your hands until it develops. I can't teach you to be patient until that triggers. That's on you. I can show you exactly what these guys do, like a roadmap to success. It's up to you if you get on the path and follow it. I want that for all of you. Once you understand and start seeing this stuff, you can literally telegraph what these guys are going to do and project the market, and you look like a crystal ball guru. Okay? All right, good stuff. When a SPY candle at the appropriate time is extending the high or low for the session, what I just illustrated for you. When it is pulled back, the high or low is now formed. So when a spike candle at between 1 and 4 a.m. or let's say at 3 o'clock spikes the high or low, let's say the high, and pulls back, you went from the initial high to where this candle came to rest, or the peak of the candle came to rest, the high point of the candle. Right? Spike candle. Boom. Like this. Spike straight out. Maybe has a wick on the top. You now have formed your high of the day. Right here. When it's pulled back off of here, pulls down, you now have your high. This pullback is this forming up. Remember, I learned to trade by the numbers. I didn't learn to trade on a chart. You guys have a major edge. The guy made me look at the board and told me, okay, like the numbers I illustrated for you, that's how I learned. And I got to tell you, it's frustrating as hell. This is easier. When they hit the number, like I showed you, the 6184, right? When they pull back to 6170, that's forming the 2 point on a 1, 2, 3 setup, right? And then when they spike back up and fail to take this out on another candle, that's how the setup is laid out. That's how it's starting to play out. It's simply this. When you have a number locked, let's say 6184 is the high for today. When they come near 6184 and fail to break it, that's your high retest candle or your high retest point that allows them to absorb those orders that are needed for them to pocket some cash. So when they come near that, when they come to 6178, 61 70, 81, but they don't take it out, the near miss ensures that you're at the right point of the chart for the short. The near miss is part of the signal system for you to understand the signal's coming. The near miss is part of that. Now, if they take 6184 and breach it to 6187, now you have to understand, where do they close? That's the next question. All right? If they come in here, this is where people say, oh, what about this, breaking this? Here. If they come up here to 61, I'm going to just use lines. 6184, and then they pull back, and they start on the second pass, and the second pass goes above and hits 6188. That's a mild 4 pip extension of the high. Add the spread. It's about a 8 or 9 pip extension of the high. Now the next question you have to ask yourself, did they close back below after they tapped out the stops? If the answer is they closed below after tapping out the stops, the high at 6184 is still valid. The trade is good. Because the 6188 tap was to pick up the orders that they couldn't get that were sitting up there. It might be like 6190 because it's a round number. People trade that. You might see it go from 84 to 90. When they open the spread, they grab the orders at 91, 90, 91, 88, like that. Understanding that is added confirmation to your trade when they make the near miss. That's the high retest candle, low retest candle. It also forms the second leg of the formation. This structure is a 30 to 90 minute ordeal. How do I mean 30 to 90 minutes? The clock starts 30 to 90 minutes when the first high is formed on the vector candle to the high. Okay, now, when they spike it to the outside, pull back, and they tap above and stay up there, if they close above the 6188, the candle turns green and closes above, that's not the high anymore, is it? 6184 is not the high, 6188 is the high. You need to wait and see what happens. Understand? Wait and hang around and see if the next candle issues a railroad track and comes back below the previous 6184. Okay, you guys with me? You okay? board's scrolling a little fast for me. Just want to make sure you're okay. Okay, good. Understanding how they handle the high and low is the whole business. Remember I told you the high and low is the whole business. Understanding how they handle it is going to help you get in the right direction. Okay, the 30 to 90 minute time frame, very important here. The 30 to 90 minutes starts when the high 6184 is set. When 6184 is the high of the day, the clock starts here. This time horizon is 30 to 90 minutes. Why? Because they got to go down, back up, near miss, and turn over. This structure takes 30 to 90 minutes, but up to 2 hours can be seen for this to develop. Okay, now, from the second leg, time horizon, from the second leg time horizon is 2 hours from entry. 2 hours right here. Okay? If you are not in substantial profit and it's chopping around and not moving, stop yourself out and get out of there. Excuse me. Hope I didn't cough in your ears too bad. You know what? I need a sip of Diet Coke. Hold on. Okay, back. All right, so listen. You enter the trade right here on the pullback off of 84, around 78, 75 with the spread, right? You're in. You start the clock. You have a 2 hour time horizon where if they pull away and go into consolidation like this and they don't move the trade, something's wrong. Ed, you asked me, I don't know the answer, man. Something's wrong, right? You start the clock on your entry second leg, something's wrong. The contracts aren't straddled in the way that they needed. So you got to scratch yourself out. Ed, I mean enough room to move your stop to break even. You should be up 25, 30 pips, 35 pips. And if it's chopping around, if the trade doesn't go in your favor right away, something's wrong, right? You'll get used to it and you'll see, but I promise you, you'll get your plus 50 so quick you'll think something's wrong with the platform. If you're the kind of guy that's been nursing trades and taking multiple orders and hanging around, and then you lift your stop and you sit there for 3 days, you're going to freak out when you hit your take profit in 45 minutes. You're going to be like, man, that was really easy. What the hell just happened? Nice to see you, Arnie. I didn't see you earlier. Understand what I'm saying? You're going to get a shift of the zone, which, remember when you've been in a trade before and they shift against you and you're down and you're sitting there? When they shift the zone, you're going to be in profit. And that's what the traders don't understand when I explain to you. You're going to be in profit so fast, like last night, after they railroad tracked to the low, they shifted right away from that area. Why? They had so much money trapped low, they got to get the hell out of there. They issued 3 vectors back into the range. You were out in 15 to 30 minutes. Understand? It's fast. When you grab the trade, it's so quick, you're going to think something's wrong with your computer or something. I'm like, holy crap, did I just book 50 pips in 15 minutes? Then what's going to happen is you're going to feel like it was too easy, and then you're going to hang around and make stupid trades and give it all back. That's what's going to happen, I promise you guys. Don't do that, I'm telling you. If you book a profit on an easy setup in 2 candles, you see the railroad tracks to the low and you take it, and in 2 candles, 30 minutes, you're out plus 50. Don't hang around and keep guessing and chasing it. That's what's going to happen. All right, look, I just realized I went a little over. We need a 7-minute bathroom break. We got about another 45 minutes, then Carl will be in. 30, 45 minutes, depending on how I go, okay? Let's do a 7-minute, and I'll keep talking about these vectors and this setup. This stuff's important, man. Listen, identifying the pattern, identifying how they handle it, and identifying where you're supposed to take the entry and what it's supposed to look like is the whole business. Once you master this stuff, you own these guys, man. So let's do a 7. We'll be right back. So, all right, so we're trying to understand how the high or low is formed, right? So they hit the number, they pull back 15 to 20 pips off of that number, go near the level, and fail to break it. That's your setup. Okay, same thing for the downside. They'll spike to the low, pull back 15 to 20 pips. That forms the hump in the middle of the W or the M, right? The pullback right here on the board forms that hump, which if you understand how the 1, 2, 3 trade set up, that's what they're doing. That's how they're working it. Okay? Important stuff to understand. The retest candle is when they come near it to pick up those orders. Okay? We call that a high test, high retest, or low retest. I have some pictures for it. Let's see. All right, we covered that. Okay, now, with that in mind, the following candlestick patterns need to occur at or near the high and low of the day. What happened? The clock's still in the way? Okay, yeah, I think you asked me about the clock. All right, here, let's go here. If the structure takes 30 to 90 minutes to build, but up to 2 hours, if you're on the first leg and the trade doesn't move into profit in 2 hours, you scratch yourself out. If the second leg presents 30 to 90 minutes in and you already started the clock, restart the clock on the second leg, and the time window is 2 hours. Okay, if that trade does not shift away from your entry and go into profit, if it's teetering back around between +1, -5, +7, and doesn't move nicely, scratch yourself out. All right, one more time. Last time, Whitney, pay attention. Roberto, okay. If the first leg, how about this? How about a pitcher's worth 25 cents? I'll draw it for you. They spike up and pull back. You took the entry right here. No problem. Okay, you start your clock, 30 to 90 minutes. You expect them to come in and do something else. Forget about the 30. It's 90 minutes, unless it's railroad tracks. They pull back. They hang around. This goes on for an hour and a half, which is equivalent to 90 minutes. The trade just sits there and doesn't go into profit. Scratch yourself out of the trade and take what is given at that moment in time. There is no chart, Floyd. I'm drawing it. Remember, they test you with time and patience, which retail traders have neither. They're trying to juggle trading between a job, and they don't have any patience. They want it to go into profit right away. Thanks, Abe. Okay, so now, if an hour and a half elapses and doesn't do anything, 2 hours maximum. You're going to know when you start trading these. I promise. The example I give you is the last 2 nights. They shifted. They got the hell out of there so fast. The trades were up big in the blink of an eye. That's how your trades are supposed to go. You're not supposed to nurse a trade for 3 or 4 days. That's not the business. You're supposed to be up in profit in a bar or two. When you grab the right price points, you'll be in profit quick, man. You're not going to sit there going, oh, man, it's consolidating. I don't know if I'm in the right spot. You're going to learn. You're going to see what I'm talking about. I promise. I promise. I promise. It's there. All right, so look. Hour and a half, 2 hours. Yes, if you're losing, you scratch yourself out because I don't want you to throw any more pips away than necessary. Okay, now, if your clock's about to expire and they make a break back towards the high, but fail to break the high and form out the second leg of the M, the clock starts over from here. You give it a 2-hour time horizon. I promise you, if you got second leg, you'll be in profit in 30 minutes. Isn't that like Pizza Hut, 30 minutes or it's free? Right, Dave just wrote, shift candles, 20 pips on average, green. The trade goes green. They shifted away 20 to 30 pips off of the high or low, quickly into your favor? Gloria, you know the answer to that. If the second leg breaks the first leg, pay attention, you've heard this 4 times, you know the answer to this. If the second leg breaks the first leg, now it comes down to this. First of all, you have your stop loss in place. If your stop has not been triggered, do not let the market prove you wrong. You are smarter than a fixed position on a chart. The answer is this. How do market makers handle the high and low is the whole business. If they close above and stay above, you're probably going to get stopped out, so take it at 10 pips instead of 20 pips. If they open on the next candle and railroad track back inside the range below the previous high, your trade is still valid. I don't know if I can make that any more clearer. Good, Gloria? It's how they handle the high and low. If they cut the high in an aggressive move, or cut the low in an aggressive move with a big fat candle, you're going to get stopped out. Why would you sit there and wait to get stopped out? Why not take a minor loss and recover on the next strike zone? Gloria, if they close above 3 pips, you got to wait and see what the next move is. 3 pips is not going to be much, obviously. 3 pips plus the spread, you're down 5. If you're down 5, you got to wait and see if they railroad track back inside the range below the previous number, or back inside the range above the previous number if you're trading off the W side. It's how they handle the high and low to pick up the orders that determines if the trade is still validated. Okay, good stuff. Okay, the certain formations that appear at the right time and distance from the blue box, the vectors, gives you the highest probability setups. Let's look at what these candles should look like. Okay, this is exactly the way I've illustrated it for you. Here's what happens. Where's my little ballpoint? Okay. They vector to the low. They issue a hammer outside pin structure on the mayonnaise. They consolidate for 1, 2, 3, 4. How long is that? 1 hour. They consolidate off the low for 1 hour. They then spike back towards the low, but fail to take out the LOD, and then they immediately get out of that area. They consolidate. Your entry is here on the confirmed railroad track. The trade goes into profit, plus or minus a few pips right off the bat, and then in 45 minutes you either hit your profit or you're well on your way. Stop loss goes right here below the low. I'll talk about where the stop loss placement is tomorrow, probably. Okay? This candle that comes back, it's like almost testing the low, right? You know, we talk about support and resistance in the business, and I can tell you the strongest support point is the low of the day. The dealer hits the number and says, no mas. Ah, you like that for you Spanish guys out there. The dealer says no more. That's the price. I can't go another pip lower because I might let some money out. That is why you have a variation of highs and lows from dealer to dealer. Because that dealer that didn't go another pip below, but another dealer went 2 or 3 more pips below, his stop orders or a certain amount of orders, maybe he was going to pick up more longs. He didn't want to activate those because he knew he was going up. So he stops right there. He's got everything he needs today. No more. He comes back and he comes near it again. So isn't it safe to say that this is the strongest support there is and the high of the day is the strongest resistance there is? Because the dealer doesn't want any more. Right? There's your entry. Bam. Beautiful setup. Okay. The high test candle. You have your vectors. Here, look, extend the box out. He moved a little later. There's your 3 pushes at the high. He cuts the high in 3 moves. There's the price point. That's resistance for today, right? I'm going to start doing that. The dealer hits 61.92 and he says no mas. He pulls back quickly for 30 minutes. He works it, right? Hangs around, validates the orders. He pushes back up. Understand this was green like this at one time, right? He then comes right back below and closes down. The high is still intact. He then shifts the zone away from this structure and traps everybody that got jammed up in here, consolidates, accumulates more contracts on this anticipation. He has built enough of a float in here to be profitable for the day, and then in one candle, he's sorry about your luck, but I need to make some money here. He shifts the zone away from higher level long holders and makes them cry. You will almost be out. By the time it hits here, you should have your plus 50. How do you know, Steve? How could you measure? Because this range is 60 pips, and if he's above that and comes below it, that's way more than 50 pips. You're out. Spread and all. Okay? I hope you see the beauty and the simplicity of all this. It's crazy. It is. It's like artwork. Understanding how the dealer traps the traders is essentially how he handles the high and low, because that's where the traps are, is the whole business. Okay, let me go back and clean it off and comes back, because you're asking where the entry is on this. The entry is anywhere in here. You have vector to the high. There's other reasons here. Maybe the tracer's not on here. This is your M formation, my friend. Here or here on the inverted hammer close below. TDI should already be gone because the closes are averaging lower. You might have a shark fin. Michael, I'm sorry to hear that, but welcome to the family, brother. I've been trading 10 years and never saw this, Michael said. Now that you know it, you can't unknow it or unsee it. I wish you well, my friend. All right, here it is again, a blow-up of it. This is a hammer, quasi-hammer, hammer, right? We're talking about the candlestick patterns. A hammer is better when there's less of a wick on top. But understand that after you have 3 vectors to the high and you got a group of hammers, notice the pins are to the top side. Remember I told you the area he's trying to work is where he throws the pins. So if you identify that he's throwing the pins to the top side after he cut the high, man, you got it. He's got everybody else, and you got what he's doing. Yes, Susan, if it happens earlier than between 1 and 4, it's still okay. But understand that if you see the first hit in the Asian session, chances are at 3:30 in the morning he's going to come back in the second session and hit it again. That gives you a very solid confirmed double top high or double bottom low, M or W. That's a better trade than trying to grab it in the Asian session because it doesn't move much during that time historically. Now, I know there was a nuclear meltdown, a lot of stuff going on. Tsunami almost broke the nuclear shell reactor. I understand all that, and you get these anomalies in the chart where they move. But as a whole, the pairs move mostly during London and the U.S. session. I've met a lot of people that wake up 4 a.m. and trade 4 a.m. to noon. If they miss the move, they miss the move. Thank you, John. I'm glad it's making sense to you, man. When this dealer switches the pins to the top side, he's going to open the spread up in here too. That's your clue also. All right? Good stuff. Pins to the bottom side. If he's working the low, the pins are going to come in at the bottom. The pins are going to come in at the bottom out of nowhere. Right? Typical shoulder, head, shoulder. Level 3 behavior. He dropped down. He spikes the low in an aggressive move. What happens with those big spike candles, Maybe they break them up on the 5-minute chart into 3 pieces. If you're trading that garbage, stop. Here, let me clean up my drawing. Back to here. He'll break this into 3 pieces on a 5-minute chart, right? 5, 10, 15 minutes. You're concerned about this stuff right in here, how he ends. Okay, now look. The initial low was set, right? This was the low of the day on the spike down after he came out of the Asian range. He spiked it crazy and pulled back. Okay? He comes back. Gloria, pay attention. He comes back and runs a pin all the way down there and then closes all the way up here. He's not satisfied with the work that he's done. He needs more money. He does it again. He goes all the way down and comes all the way back up above the previous low. Understand? Not allowing traders to book a profit. The spread gets opened up in here. Now he comes back for the second pass, and it's lights out when he shifts the zone right here. In 3 bars, 45 minutes, and takes back all of this money in 45 minutes. This went on for hours. Do you understand that? When he shifts the zone in 3 bars, he just beat the crap out of everybody that's been trading for the last 15 hours. Yes, it's a variation on a triple bottom or triple top. Yes. The center happens to be the head is longer than the 2 shoulder pins. But yes, that's what it is. Notice in here you got vector to the low, 3, 1, 2, 3. This stuff makes traders go, oh, look at that, it's going down, sell. I had a friend, I think he's in here, from California, Dave. I won't say his last name, I don't want you to bother him. Used to fall for this crap all the time. He was excitable guy, I love him. I can tell you he doesn't fall for it anymore, and he consistently books an exorbitant amount of pips. Almost as much as a Subio. Dave, if you're in here, buddy, I didn't see you. Thought I saw you earlier, yesterday, I don't know. Happy to have you. He used to scream on the spikes and get excited that we're missing Australia and it's going. Hurry up, it's going straight up, we're missing it. That behavior is exactly what they're trying to create in your head by showing you that aggressive move. All right, same thing. Railroad track spike to the outside. Right? They come in 1, 2, 3 to the low. They hit it. They get the hell out of there as quick as they can by 1 shift away. This structure forms out, right, the W. Don't you see it now? It's okay to take the trade in here. When they come back and fail to take it out, they're trapping. Snatch it away. Sorry about your luck today. Evening star formation. This is one of my favorite candles, and I'll tell you why. They go, oh, it's indecision. Look right here, look. You know what that is? That's an extra 15 minutes to take your money away by the market maker. Sorry, but that's what it is. That's the truth. When he hangs around right near the high, think about the railroad tracks. 15 minutes up, 15 minutes down. Right? That's a 30-minute anomaly. He goes, we're high, let's hang around for a few minutes. So he adds 15 minutes to the structure right here, up and back down. He adds 15 minutes to the structure in the middle, and he induces traders to take the longs. There's no indecision by the market maker. He knows exactly where he's going. They call that indecision, oh, the bulls and the bears are fighting it out. No, they're not. They're losing. The market maker's winning by hanging around for 15 more minutes and taking your money. Same thing for the Morning Star. Same stuff. That's an extra 15 minutes in there of the structure for him to take the money. That's all that is, nothing else. Don't forget it. Railroad tracks. You guys keep asking me, how big do they have to be? Australian, they're going to be 10, 15 pips. GJ, they might be 50 pips apiece. 50 pips straight down and 50 pips back up. You'll know the structure when you see it. You got to get some time in front of the screen and recognize it. When the railroad tracks come in at the high of the day or the low of the day, that's what you're concerned about. If they come out and break the pattern, go look at last night's Euro CHF, GBP CHF. That's what they did. The railroad tracks came right out of the box and set the low of the day. They repeated the level from yesterday. That's what we're talking about here. Doesn't matter the length. It's the behavior. Don't get caught up in, oh, how big the railroad tracks have to be. I don't understand. I mean, don't trade two doji crosses and say, Steve, they look like railroad tracks. That's not what I'm telling you. I'm telling you is they're going to make vector to the bottom, and they're going to come right back out. Different lengths. It's the behavior. Watch the development of those, and you will understand. Okay? The wick sizes are irrelevant because the wick sets the high of the day and pulls away from it. It's the behavior with the pattern. That's what I mean, all right? What do I mean when I say railroad tracks? It's thought that this looks like a set of railroad ties, I guess, and then they lay rails on this, right? That's where railroad tracks comes from. I didn't make it up. It's not my term. Let me find here. Couldn't you picture like all these coming down, then you would lay your rails right here and you drive your little pins right there, your little plates if you were a railroad worker? Not that I ever was. See what I'm saying? That's where railroad tracks comes in. They look like railroad tracks. Or these could be the rails. You just now got that, Lou? After all this time together? That's where it came from. All right, man. Have some imagination. Okay, look. The doji forming the high of the day or the low of the day is held for an additional 15 minutes. It allows the dealer to flash across or grab a few more contracts. That's what's actually going on. The evening or morning star holds the level and opens the spread, which induces traders to take the continuation. Hammers, inverted hammers, used to activate the pending and trigger the stops. Okay, I'm giving you the real definitions of these candles, by the way. If you don't want to know, I'll go slow. Spike tops, spike bottoms. It's to trap and create drawdown. Immediate drawdown. The railroad tracks, get in, grab your money, create immediate drawdown and panic and get the hell out of there. That's what they're for. Stop thinking like a retail trader. Think like a market maker. Why would I add an extra 15 minutes at the top of the formation if it's a doji? I want to pick up some cash. I mean, that's what I'm in the business to do. Why would I throw a hammer, inverted or regular? Why would I spike a hammer to the top? I want to pick up those pending orders on the other side. I want to trigger the stops of the people that got it right. I don't want them to make money. Same thing for a spike top or spike bottom. I got to trap the traders short, snatch the market away, and put them in the drawdown and scare the crap out of them. Make them start doing stupid stuff so I can end up with their account. After all, that's my job. I get bonused on that. Understand? Good stuff, good stuff. All right. Is anyone still writing this? I'm going to move on. Carl, you're up in about 10 minutes if you can hear me, buddy. Maybe a little less. Okay, got it. Thank you, Susan. Somebody got it. Alan, thank you. Sam. What is DD? It's not what you think it is. It means drawdown. Shame on you, John. I read your mind. All right. Market makers induce traders to take the wrong directional move by sharp, aggressive price changes at or near the high and low of the day. I drew it for you, right? The patterns will almost always reveal a reversal unless they time out. If the pattern times out over 2 hours, you scratch. Why would the pattern, that behavior, fail? I don't know. Somebody loves me? Thank you. My wife's not going to be happy. Because the trap volume does not exceed the total value they were seeking. So you can expect an extended stop on, oh, it's Karina, hey. You can expect an extended stop hunt, how far? 25 to 50 pips to the next level. Okay? Peter, it's an art form. You got to look at it. So if the pattern fails, it times out. 2 hours and it doesn't show a profit. I could tell you that if you were trying to grab the reversal on Monday's tank when it dropped, it stalled at the U.S. session and went to consolidation coming into the session changeover. If you tried to trade that back, which you're not supposed to, by the way, count the bars from where the entry appeared, and you should have timed out. Nick, I'm going to give you every single pair and every value. Hang in there. I didn't know it was you, Karina. Thank you, Bruno. I like to think it's good stuff. It's making a lot of people wealthy. When the trap volume is not met, the market maker has 2 moves left. Think about this. You're in the trade. It's not going your way. 2 hours is about to go off on the alarm. What does he have left? Hit the stops and rise. Hit the stops and fall. Right? That's one move. If you're in a short, hit the stops and rise to the next higher level and then drop. Or, remember that Australian chart a few charts back that he extended the high for a longer period of time and hit it again? He can hold the level and work the crosses and come back to Australian later. He doesn't give a shit that you're in that trade. He moves it when he feels like moving it, when the money's built up for him. Not because you got to go to bed or it's time for you to get your clothes on and go to work. He don't care about that. He cares about money. So if he holds the level for an extended amount of time, it doesn't mean the trade's necessarily bad. But I want you to take it off. Why give him the opportunity? The criteria has broken down. If you get stopped out, you wait 2 hours. 3 candles vector, 45 minutes. First leg pullback, 30 minutes. Second leg comes in, 15 to 30 minutes. 2 hours. Look for the entry. Next level settles in. If you get stopped out, come back and evaluate the chart in about 90 minutes and then look for your entry about 2 hours in. The time element. He's testing your patience with time. Something that no trader has because you got to go to work, your kids are screaming, you're tired, you got to get up early tomorrow, you got to take a nap, whatever. The time element is something that very few people realize and is overlooked all the time. He does it to bust your chops, man. Okay? The moves are carried out over a time interval and induce traders to take positions even when they're not ready because you feel like you've got to get something going. Forces you to make up stuff. Okay, if you're caught by the market maker by this move, wait for the next rise or fall. Minimum of 2 hours. Now, here's a very important note. If you took the move in London and he snagged you, and it's coming up on the U.S. session, the red box is starting to show up, wait for the changeover. Okay? If he snagged you and it's the end of the day, get your money back in London. Don't jump on something to try to get back at him. You're not going to win and beat him by trying to get back at him. You're not here to get even, you're here to get paid. Okay? You're in a trade, you get stopped out. Next level strike zone, 25 to 50 pips higher. The pattern appears, minimum 2 hours. If you're close to the session changeover, hold and wait. Wait for the session changeover. When the session changeover appears, look for a fresh set of signals. W formation reversal, M formation reversal back into the range. Breakaway trade or straightaway trade continuation if you're at level 2. Take it. You'll make your money back. If you control your loss, you'll end the day net positive. If you don't let the loss turn into a big, ridiculous move, you'll end net positive. Am I talking too fast? Someone says, pop a Diet Coke. I don't know. I'm jacked up, man. Having a good time. Hope you guys are enjoying this. Okay. It's a good point to see. Car, are you on tonight? Are you here? Anybody let that guy in? Do I have to give control over to him? How does that work? His mic is still muted. Somebody unmute Car, please. Organizer.
Yeah, I'm here.
All right, beautiful. All right, listen.
I'm here, Steve.
Okay, hang in there a minute. Some of you guys know Carr, some of you don't. He's a fantastic trader. He does the free sessions on Sunday night going through the levels. We call it Counting with Carr. That's as funny as I could get. Counting cars, I don't know. Counting with Carr. All right, what he's going to do now is a lot of guys don't know how to mark up the charts. He's going to spend the next 45 minutes, takes you to about 11 o'clock, of marking up the charts. If you are a veteran and have been here, you can go to bed now. I'm not going to say anything else. You're not going to miss anything else if you've heard Carr and you're part of the sessions. Wayne, how you doing? Okay, listen, I'm going to shut my mouth. He's going to go till about 11. I'll give you the homework when he's done, what I want you to do tonight. Remember one thing. Do not submit homework to me after 4 p.m. Eastern Time tomorrow. I won't have it done in time. It's not fair for me to get up, try to eat something, and get grade homework right before. I'll be up all night looking at it, and all morning I'll go to bed, I'll get up, do some more. But don't send it to me at 5 minutes to 6 and go, why didn't you do my homework, Steve? That's wrong on so many levels. All right? I'm having a great time. I love you guys. I'll see you tomorrow night. I'll be back in here at 11 to go over the assignment. Carr, it's all yours, buddy.
All right, thank you, Steve. All right, guys, welcome. I'm sure you guys enjoyed the class with Steve. I did. It's always amazing. Every time I attend the class, I learn different things, and I always attend every single class Steve does, because you never know what he comes up with in terms of insightfulness. So I'm sure you guys are seeing my screen right now. All right, so very quickly what I'm going to do is show you guys how to do the homework. Okay, so normally I start off with the 1 hour chart. Okay, so you know what, before I do that, for the new people, let me introduce myself very quickly. I met Steve at the old venue, and Steve was actually a teacher, and I personally believe in destiny. So what actually happened was I was supposed to be in Budapest for vacation, and it just so happened that the ticket between the day I bought it to the previous day was significant. So I said, you know what, I'm not going to go. And I called up the company and I said, hey, I need to take a class. I got 3 days. I want to take a class. They're like, all right, cool. You've already paid for the class. You can attend this class. They said, yeah, this guy is teaching. His name is Steve. And I'm like, is that guy any good? I've never heard of this guy. I mean, he's not like somebody that I know from CNBC or something. So they're like, nah, he's pretty good. He talks a little too fast. He's jacked up on Diet Coke, but he's pretty good. So I'm like, all right, cool. I'm going to go attend this class. So I walk into the class, and there was about 20-odd people, 20-something people there, and I sit, and the guy goes, Steve starts his speech, and he goes, okay, man, do you guys want to make money, or do you guys want me to teach from the book? And I'm like, come on, of course he wants you to show us how to make money. I can read the book myself, right? So okay, I'm speaking into my headphone actually. So I said, all right, do you know what? Show us how you make money. So he said, all right, good. I'm going to show you guys how to make money. So he takes the book and he throws it into the garbage. And I'm like, oh, you're throwing a book into the garbage, man. That's interesting. He said, yep, you don't need this stuff. This is all garbage. I'm going to teach you the real stuff. So we were like, all right, that sounds cool. And then he says, all right, I'm going to give you guys a test. I want to see what you guys know. And I'm sitting there, I'm like, how are you giving us a test? He hasn't even taught us anything. He said, well, I want to see how much you guys know, how much garbage you have in your head, and then I'll help you unravel some of the garbage. So, and sure enough, he did. He showed us some of the stuff, and after the class was over, I just sat there and I was like, oh my God, I'm going to kill it. Because the way he was teaching us was totally different from everything else I've ever learned. And not that I've learned from a lot of teachers, but just, you read a lot of books, you try to get an education through the internet because you don't feel like paying for it, all that stuff. So anyway, to make a long story short, the lesson learned were tremendous. And as Steve went out on his own and he started teaching us, he started improving in terms of delivery and in terms of material and in terms of clarity. And every time he does a session like this and people ask questions, he updates his chart and he updates his PowerPoint to make things a lot easier for us to understand it. So anyway, after I finished the class, I was like, yeah, I got this stuff. So I started trading. And obviously I haven't done the homework by that time, so I was like, I got this stuff down. I didn't do the homework for about a good several months. And then when Steve came back to teach the class, he's like, did you do the homework? I'm like, no. So anyway, to make a long story short, after he called me out on it, I spent a couple of months doing homework. A month or so, just sat down and I be like a madman. I went back on all the majors. I went back a year or so, and then I just did all the homework. And in Orlando, when I went down to Orlando, I handed him a flash drive with a bunch of other people's homework, and we just handed it to Steve and we're like, here's the homework. And he was, he said, all right, cool, at least now you got it. And since doing the homework, I actually understand the oscillation of the market. That's a word that Ray Jarvis uses, oscillation of the market. Okay, so let me show you very quickly on how to understand the oscillation of the market as it moves. Okay, so on the 1 hour chart, all I do is mark my levels, so I know exactly what I'm looking for, where I'm going with it. So for example, in euro dollar, I'll say, okay, this is peak formation high, right? I know why, because if you look to the left, you see 3 levels going up, right? So I don't want to keep going back, otherwise you'll keep going back. So let's start from here. It starts oscillating up here. Notice how it oscillates right up to the high. Every time it hits the high, it hits the stop, it comes back down, comes back up, induce, and then it comes back and hits the stop, it comes back down. Okay, so I'm watching this and I realized I'm in level 3 because there were 2 other levels from before. Then you see a sharp drop, then you see a consolidation. So what I do is I draw boxes around my consolidation because I can see consolidation easier. Because if I don't mark the consolidation, if I start seeing the drop, then I'm like, oh, that's the drop. But I'm just drawing my box from the low to the high, and I'm just trying to see how it's oscillating within the box. So once it takes out, breaks below my box, then I know I'm in a different level. That's how I look at it. How do you draw the box? Okay, so I know I showed this during the when we were downloading indicators and stuff, so I'm just going to go through this like in 10 seconds, okay? Anywhere in here, you right-click and you click Customize. And on the left-hand side, you will find triangle and ellipse and all this other stuff. You'll also find the box. You select it and you click Insert, and it will pop up over here, and you just close it, okay? There is 2 texts. One is A and one is called text label T. Always use the one that says A. The reason for that is because as you scroll the screen, the verbiage is going to go with the screen, not get stuck over here. And then as you scroll the screen, the thing is still over there. Then you're like, what the heck am I looking at? Okay, so that's the purpose of using the A instead of the T. Okay, so you draw these boxes, and what I'm going to do is I'm going to draw these boxes with you so you guys see how to do it. Okay, you can change the color of the box. So for example, if I'm drawing a box right here, originally it's going to look like this, like that. Okay, you double click on it, it'll just drop. You double click on it, you have these little dots on the side, and you right click, click rectangle properties, and you can change the width of the box, how wide, how thick you want the box. And then when I uncheck this, now it's clear in the inside. Okay, it's clear on the inside. And then when I double click it, I can move the box anywhere I want. And once I double click it again, once those little dots disappear, I can't move it. I can move my whole screen. I have to double click to delete it. Okay, so that's how I draw my boxes on the 1 hour chart. Now, the reason this thing is in blue in color, because that's how I differentiate. Once I look at a chart and I know it's blue, for me, it's the 1 hour chart. For some of you, you will be, you know what, I don't like it this way. And that's cool. What you can do is make this black in color. And the reason I say that is because you can shift. You can take this and change it to different time frames. What I mean by that, okay, so for example, let's go through this, how to do this. Okay, so I have my level 3, quick drop, Level 1, I draw the box. It breaks it. I'm in level 2. It breaks it again. I'm in level 3. Now, remember, in level 3, market makers are all in, right? And then you see your pattern. And now you're looking at it and like, all right, what is actually happening? Am I going to rise? Am I going to drop? That's the decision you got to make after you view your chart. And you're going to look at it like, all right, man, it's coming up to the high. It looks like it's forming an M pattern at London, right? Railroad track, second leg, boom, you know that's the short, okay? That's the short. Yes, there's a little head and shoulder pattern. And all you're doing in the 1 hour, just marking off levels. On the 15 minutes, oops, hold on 1 second. Let me just bring my 15-minute chart over. On the 15 minutes, you're actually looking at your entries. Okay? Now, if you take the 1 hour levels and you transpose it, what I'm going to show you how to do that, then you're going to be easily see that you don't have to mark the levels off again. So let me show that to you. All right, so let's start a new chart. So how do you get a new chart? You click Market Watch. And let's say I'm going to take Euro Dollar, right? If I obviously grab Euro Dollar and throw it in, it's not going to make any difference. I'm already in Euro Dollar, but I want a different chart. So you have to hold down the Control key and take Euro Dollar and drop it in. The minute I do that, it's going to drop in. This is how I set my default. So it's automatically going to drop in my black screen, my black chart. Okay, automatically set for 15 minutes. I'm going to change it to the 1 hour chart. Okay, for those people who notice it, these are those little things either the moving average Granny likes to use. But anyway, I have that set over here. Okay, so now this is my 1 hour chart. I'm looking at this stuff and I'm like, all right, cool. I see now what I'm looking at. It looked like peak formation here, right, and then it starts dropping. So let's line up what we were looking at earlier with what we have here. Okay, so this was April 28th, and this I gotta move to April 28th just to be on the same page. Excuse me while I move the screen. Okay, so April 28th is right over here. Okay, let me shrink it. Okay, so same thing. So what I do is I grab my little thing and I mark it off. And notice what I normally do. I'm going to move this closer so I don't have to keep flipping back and forth here. Okay. See how I grabbed it from here and I pushed it over here? See how I have level 3 written? I can always go in here and I can click A and I go type in level right up here and I go in and type in level 3. Now if I want to make a duplicate and I don't want to keep, and I don't see how I moved it, I can move it. Once I double click on it, the little thing shows up, the little white dot. And if I click the control button also, I can make a duplicate copy of it so I don't have to keep retyping this stuff. You see how easy it makes it, right? Double click, click control, and grab it. Makes a duplicate copy. Okay, so I got my level 3, and then now I start doing my level 1. Remember Steve says, hit the stop, drop. I'm expecting hit the stop, drop, and that's what I'm looking for. Okay, I'm in level 1, I'm expecting a straightaway, stop and high drop. Then I'm in level 2, same deal. I'm looking for hit the stop, high drop. I get it right here, beginning of London. I get it again here, beginning of London. Here's something different. Either I could take it or I pass. It's a railroad track. Okay, either I take it long or I pass on it because I'm looking for stop and high drop. So that's how you would look when you're doing your homework. That's what you're looking for. And now once I narrow it down to the 15 minutes, then you're going to see what I'm talking about, right? And then here's my level 3 begins, right? All of this stuff. So anyway, and then there is a reset up here and all that good stuff. So anyway, so what I can also do is I can double click on it. I'm going to bring it down. Now instead of me typing again, I double click, I right click, I go to text properties, and I can change that to 1. You see how I did that? And then I go here, double click, change that to 2. So very quickly I can mark off my levels, and I know if I'm on the hard right edge, I'm right here, and I'm like, boom, I'm in level 2, I'm expecting 1 more day of drop. Or if I'm over here on this hard right edge, and I'm looking at it, I'm like, man, I gotta go below this to be level 3. I'm in level 2. I'm still looking for shorts. When it comes out and it hits the stop high from the little M right on the 200 EMA on the 15 minutes, I'm shorting it. So that's exactly what Steve talked. Remember, here's your V. I'm sorry, here's your A, M, A, right? And then it drops and comes back up again, and it does a reset. And I'm sure you hear more about that kind of stuff, right? So here we go. Drop, drop, drop. So that's how you would mark off your homework. Now, your entries are going to be on the 15 minutes. So here's my 15 minutes. Okay, this is how I mark I'm just showing you not coinciding with that same thing. So this is how I would mark up my 15 minutes, right? Now, would I like to be more detailed? I could be more detailed. And the reason I'm not as detailed as I used to be, and just let me show you very quickly what I mean by that. Okay. Here's my homework. Okay, here's my homework. I have homeworks on patterns. I have a ton of patterns that I have. Okay, open the. Nope, it's open on the other side. Sorry. So I have these different patterns, and I look at them all the time. I'm like, all right, this is my pattern. This is my pattern. This is my pattern. I keep a folder of patterns, and that's why Steve said variations to the theme. I have them, and then I also have my homework. Okay, here's my EU homework. I have it on the 1 hour and the 15 minutes. Okay, different pairs on the majors, and then I also, when I send it to Steve, I zip it up and I email it to him. Okay, here's my EU, and then it's broken by months. And if you go to any month, I don't know, April, and then broken down. And I'm going to show you very quickly what it looks like when you actually. I apologize. I have a second screen, that's why I apologize. So this is what it looks like. I'm going to blow it up a little bit. You see how it's marked? If I don't see an entry, I don't make it up. And I don't be like, oh, here's the high, here's the chop. I just said chop. I'm looking for the right entry where I can actually see it and I can actually enter the trade. I'm not going to sit there and lie to myself and say, oh, I look at this and I'm looking at that. If I see an M, I'm going to take that trade. All right? And then you see these little zigzag lines. Those are the zigzags that I put in there to know what my bias is, what I'm looking for. So let me show you what I mean. So anyway, you have an idea now that that's what I do. I have all my homework, and I do send my homework to Steve. Okay? They're all lined up. Every month I send it to him. Every month is done. The month is over. I'll send it to him. So I'll send him July next. Okay? You're probably going to receive it in a day or two when the class is over. All right, so that's what you guys gotta do. Okay, when I wasn't doing the homework, I had no idea what I was gonna do. So that's why you see these zigzags. Okay, so once I identify the peak formation low, that's my head and shoulder pattern. Then what am I looking for the next day? Stop and low rise. After you start looking at this long enough, you're gonna see here's your W pattern, man. It's early. Here's the stop hunt, first leg, second leg is railroad track. I missed it. I was sleeping. I come right here, and I see it, and I know that that's what's going to do. This direction, I go long. Right off the low, I study the pin bars, right? That's a stop on pin bar, and I go long. So that's why I would mark my entries. See, it comes back, it touches, hits the stop. Steve will talk about something called a 50-50 bounce, maybe, right? 1350 cross, retest, and then boom, gone. You get a minimum of 50 pips on these bounces, and then once I'm in level 3, see that's the big fat M, then I'm looking for shorts. Okay? Let's say I saw this personally because I've been looking at these charts for a while, and that's why my zigzag tells me, here's my peak formation low, here's my V, and next day is also my V. I'm looking for a long, which I did take right here off that pin bar. Okay, it went up about 58 pips. You hit your target, man. You're done. I'm done. Once I hit my target, I'm done. I go to sleep. I don't try to trade that short and try to trade that long and try to trade that short. I mark this off because I know I can do it. I can trade both ways because I'm in level 3. And that's at one point you're going to get to that point. And then you're like, oh, I got it. All right. Then it comes one level down. It forms this chop. There's no trade. and then all of a sudden it starts heading back up, and you're like, wait a minute, I'm level 3 and supposed to go down, but it doesn't do it. There's a reset. Okay, and you're going to figure that out when you start doing your homework, that the reset happens because you see these drops. On the 15 minutes, you're probably in level 3 here. You see, W pattern. It'll come back up 1 level, and then you're going to get a reset. So usually in level 2 on the 1 hour, you're going to get a reset on the 15 minutes. Okay, so when you do your homework, you'll find it. That's why these things happen that way. All right, it'll do a reset and it'll start heading back up again. And you're like, what the heck is going on? And then once I know that, I'm looking for stop and low. Here, the big fat W, or 3 hits to the low, peak formation low. I'm expecting stop and low rise. Next morning, quarter wood. Maybe I'll blow it up a little bit. You guys can see it. Here's my W pattern. I'm looking for stop and low rise, level 1. Next, I normally don't trade a counter trend trade. I mark them off, but I don't take them. Okay, that's something very valuable I learned in the New Jersey class. You know, take one trade. You can see 3 swipes to the low. 1, 2, 3. This one did not go below that, right? So this is the third one, and then hammer, and then it's gone. Nice quarter wood. You could have gone long here. That's over, man. You just enter on this one. It's over. It's done. Okay, same deal. I'm still in level 2. Can you take a short high? Yes, but your better trade is stop and low rise. Here's the beautiful W pattern. Can you see it? And then it's over. Now you're in level 3. Now you're looking for shorts. Here's the big fat M. I took the short right here. All right. And now I'm in level 3. I can trade both ways. Okay. If you're not clear, like if you notice I didn't mark anything, I didn't see anything clear, I didn't take any trade. Right? When I woke up, I'm too late. I'm in level 4. I'm like, I don't know about that. But isn't that quarter wood the same quarter wood over here earlier when we saw it? Right here, right off here. See? Doesn't that look the same as that? I know when I'm scrolling the screen, I apologize, man. It gives me a headache too. The same move. Same move. You take that long. 40, 50 bips. You probably hit 50 bips right up here. And then notice, it did a head and shoulders pattern. When you wake up, you know you're an extended stop and you're in level 4, which normally doesn't happen. You see a head and shoulders pattern. You see pins to the high. You see little railroad tracks and pins to the high, pin to the high. You know this is going to drop. Okay, at some point, you're going to be able to trade intraday levels. 1, 2, 3. It's the same thing. Variations to the thing. I know this thing is going crazy. Sorry. Let me just look at some of this. Do you draw the short lines? How do you draw the short lines on my MT4? Only can draw a long trend line. What do you mean short trend line, man? You just take the trend line and draw it this way. Just draw it downwards. Right? So like this, I'm expecting stop on like that. Right? So that's what I would mark off. Hit the stop high drop. Boom. Hit the stop high, drop. All right. And then I'm in only level 2, now I'm in level 3, and I'm expecting it to do something else. And then, okay, so I woke up, I'm right here, I'm like, dang, I'm in level 3. Okay, I missed the short, I missed the stop point, I could have taken this right here, or I pass and I wait and I see what happens. All right, how did you get the painted blue box? Painted blue box? The blue box comes with the indicators, man. It's called the work time. You see indicator list, and in the indicator list, you see all I have is my moving average, ADR, daily high-low, work time, and the moving averages, and then I just kind of have my TDI sitting at the bottom over there. I don't really use it. I just have them it for show and tell, just in case I have to explain something to somebody that really needs an indicator. Then that's when I actually do it. All right. Oh, ES. ES is an extended stop. So also Empire State. That's an Empire State pattern. Sorry. If you look at the ES, it's like an Empire State, right? This is the antenna of the Empire State Building. My entry is right. Usually I would take it right off that pin, but sometimes I'll take it right off that. You see how it does it? It does it again right here. That pattern and that pattern, you can grab it right off here. But normally I'll grab it off that pin bar, and then that'll be 50 pips, and then I'll grab it again. This one coming back inside, and I'll grab that move both ways. All right. Yes, I will uncheck the ray box so that you see when you have like when I'm drawing the trend line, for example, right? Normally your trend line has this thing called ray. When this ray is checked off, this thing goes to kingdom come. So in order for you to do it, you double click on this line, right click, trend properties, go to parameter, and uncheck this. So it's only as long as you make it. Okay. How do you get the gray boxes at the shift change? The gray boxes, you know what? This gray box is instead of the red box you guys have, the US session, I just changed that to a gray box. Yeah, just slight subtleties to it, but normally you would have your shadow boxes and stuff like that in there. Okay, this is just an older platform, and this is just how I'm used to seeing it, so I just haven't changed it. Thank you, thank you. Yes, I'll be happy to go over simple stuff, because believe me, what you guys are going to go through as newbies, I've gone through, and I understand where you guys stand, and I came from where you guys came from, so that's why I'm always willing to help. All right, and study. See, when you're looking at this pattern, I'm in level 2. Mark it off 1, 2, 3 swipes to the high. If I showed you my homework, I would have this. Now I don't, but before I would have this marked off as 1, and I would just mark it as 1 right there, like that, at the candle, next to the candle. And I would mark this as 2, and I would mark this as 3. So now you can see 1, 2, 3 swipes to the high, railroad track, and my entry is right the minute that railroad track closes. Why? I'm expecting, based on my little dashes, I would draw these before the session start, and I'd be like right above the Asian high, like Steve says, right? It's about 20 pips above the Asian high, maybe a little bit more, all right? Sorry, about 20, almost 25 pips above the Asian high, all right? Right to the pin is right up here. That's what you're looking for. Railroad tracks, hit the stop, induce long, trap, and then you're ready to go. And it's over, man. Once you take that trade and this thing shifts, it's over. You're already up like 38, 40 pips. And the next candle comes, it's done. All right. How long did it take? It took me about almost, let's see. I started doing a lot of levels around September. After the May class, so it's about three odd months. Took me about 3 odd months to look at the levels, and the way I look at levels is just not like, oh, just a drop here, because sometimes you see, oh, that's my lower drop, then you think, oh, that's the next level. No, that's not it. Like Steve says, right? If for example, one day I'm looking from here to here, and I say, okay, that's 194 pips. I'm looking at my ADR value. Remember, Steve says you break it up approximately, not a science, right? Approximately, you take the ADR and you divide it by 3. So it'll be roughly about 50 pips each move, each push, right? About 61 pips. And then the next level starts, and then it's about, this is a little bit smaller from the bottom here, and then this is a little bit bigger, okay? It's 100 pips. So again, usually the second push is smaller. Why? Remember Steve says, absent of market makers, they just want to see how low you push it. And then they say, all right, enough, man. Let me just pull it back, hit the stops of those guys who did take the trade. You know, there's some stop put over here, because why? You see this push and it pull back? You see this pull back here? People will jump their stops over. You think, I don't want to lose too much. So you just move it from here to here to grab 10 pips. They move the stop right above here. They come in, absorb them, hit the stops, and then they continue the merry way. They always hit the stop one more time before they move. So, you know, if you identify where the stop hunts are and line it in the direction of the market maker trend, and then you draw these little zigzags, you're saying, man, I know where I'm going to go next day. I'm going to hit the stop high drop. Now I'm in level 3. I'm waiting for the stop hunt low rise. Okay, if you start looking like this, like all garbage, then you think, you know what, I'm going to pass on this. Then you see these railroad tracks, and you're like, man, I know what these guys are going to do. They induce short below previous day's low, trap them with a nice hammer, comes right back in, I'm in here, my stop goes right below the low. Now, again, whatever you're comfortable with. Some people don't like such big stops. Okay, like me, I don't like very big stops, so I may pass on this trade. All right, and then I know news is coming out, so I may pass on this trade altogether. I'm like, you know what? I'm gonna pass on this trade, man. It doesn't look like it's there's news coming out. They may hit the stop one more time and all that kind of stuff, and I have a 30 pip stop. I don't like it. Okay, and that's your prerogative. But knowing which direction you're gonna go is tremendous. Like if I say, okay, this is a big fat W. Next morning, I'm looking for stop on low rise. Boom, take the 2 pins, and I go long right off here. There's 60 pips. All right, 2 pins. Steve will talk about that. 2 pins to the water, 2 pins to the Mayo. Okay, all that good stuff, man. Here's actually a W pattern right here. You can trade any session as long as you do your homework on the session. Okay, so to be clear, if you are trading London, your homework should be focused on the London session. If you're doing New York, you should be focused on the New York session. I'm not saying don't mark off the levels on London. I'm saying your focus. I'm focused. My focus is in London session. I don't trade New York too often, so therefore I don't take these reversal trades. I mark them, but I don't take them because I'm not usually trading at the time I'm sleeping. So whatever session you're going to mark, make sure that's the session you're going to trade. So for example, I see this big M pattern, I will go short right here. And then once I identify 2 pins, I'll get out of my short position and go long. Why? Because that's how Steve taught me. Trade both ways. Market makers trade both ways. You're trading the pattern and you're understanding the harmonics, the oscillation of the move. And that'll come with time. I know this thing is flying right through, man. Pushes and levels are the same. Yes, I call them pushes. Intraday, when it's happening within the day, I call them pushes. And when it's happening in multiple days on the 1 hour chart, I call them levels. So that way I just distinguish between levels and pushes, because intraday you have 3 pushes, right? So for example, the 33 trade on the last day, in level, moving towards level 3, you see 3 pushes, and then it'll go to the peak formation high. Okay. Okay, when Steve is going to take care of that. Okay. Okay, what else? Oh, how do you so let's say for example we did this already, right? This is my 15-minute chart. Nope, that's euro pound, sorry. Here we go. So now once I mark this levels off, right, if I want to change to the 15-minute, or I'm going to save this. I'm going to go to my profile. Now I have my levels on the 1 hour. I'll go to profiles. I'll go save as, and then I'm going to select a profile, whatever it is, euro, dollar, whatever. You just call it euro, dollar, 1 hour, right? I save it. Now I have my 1 hour profile on the levels. Then all I need to do is click 15 minutes. All right. And as you can see, everything is already marked, man. I don't have to go mark them off again. You see, everything is there. All my levels are marked off. I don't have to go and, oh, what level am I in on the 1 hour? Nothing. I already know exactly what level I'm in. Okay, so maybe this will help instead of you marking the levels off twice. And how do you change it from one platform to another? So let's say I marked it off in Alpari and I want to shift it to MIG, right? It's an interesting process. What you do is, let's see. Okay, they're actually right over here. I'm going to move it right here, and I'm going to move it right here. All you need to do is you right-click, Properties, okay, under Shortcut, you go Open File Location, right? And you do the same thing for Alpari, right-click, Properties, under Shortcut, Open File Location. The reason I'm going a little fast is because this thing is recorded, so you guys can go back and look at this stuff. And this way it'll also save you a lot of time, all the profiles and stuff. You don't have to do it for every single platform, because the reason I have multiple platforms is because I have multiple screens. I want them to all be opened at the same time, so I'm looking at different things at the same time, right? So if I'm doing my homework in one and I'm trading in the other, I won't be able to see them. All right, so I don't have to keep marking the same thing 20 times. And then all I need to do is I'm like, all right, you know what? I save my thing in profile. I go to profiles, and I'm like, I found it right here. It's euro dollar, right? So I just grab this and I just throw it in. Same thing over here. I go to the profiles. My euro dollar is right there. Boom, I grab it here and I just chuck it in here, and boom, it's done. So that way you can transfer to multiple platforms. You don't have to keep doing it over and over and over again. Okay, so these zigzags are amazing. Okay, what they do is they kind of keep you in line. So if you know here's your M and you're looking for V and you're looking for V, then you just kind of draw these things and you just say, you know what, I'm looking for this, I'm looking for this. I'm only trading in line with the peak formation. If you do that and don't take counter trend trades, you're probably going to be right off the bat 80% accuracy. If you start trading counter trend trades, because why? Because when you're trading counter trend, you see you took this counter trend, you kind of went sideways for a while, your 2 hours will pass, and you're like, dang, I didn't make any money, man. But if you're trading in line with the peak formation, boom, it's over. It's the 100 pips. From here to here, the 100 pips is over. You go to sleep. Don't try to trade it back into the range. You could. Then Steve is going to yell at you. Time, leverage, and freedom. That's what you're trading for, right? Let's see. How low below consolidation is the level? On this example, I see levels clearly, but when they are big, but when I see small ones. Okay. You know what? Let's look at this, man. This is how many pips is this? 118 pips, okay? This is about average euro dollars, what, 150 pips? Notice the ADR. Roughly, rough. It's not like 100%. I mean, I even took it, if you actually take it, if you really want to be anal and be like really accurate, just move it all the way to the bottom. And now you go from the top to the bottom of the range, it's about 130 pips. You go from the top to the bottom of this range, it's about 180 pips. My ADR is about 150 pips, right? So that's how you do it. You just measure from the high to the low, 175 pips. So now I know this oscillation is just an oscillation, but it's not a new level. I'm just going from the high to the low, and I say, man, I'm 180 pips. I'm right around my ADR value. Maybe that helps. Hopefully it helps. Can you explain how you determine how to draw the zigzags? Good question. How do I draw my zigzags? Well, once I identify my peak formation high or low, for example, here's my peak formation high, right? Here was an M, and then they did an extended stop hunt, right? Again, if you can't see it on the 15 minutes, okay, I'm going to go here, and I'm going to show you something cool. Like Steve said, you can go to the half hour. Then you can start seeing stuff that you've never seen before. You're like, oh my God, look at that. Beautiful Empire State pattern. Actually, evening star pattern, right? You know that thing's going to drop. 2 pins to the water, that thing's going to drop. Things like that, you're going to start seeing it. Obviously, the more time frame you look at, sometimes you get more confused, but sometimes it helps. Right here, the big fat M, second leg of the railroad track with a high test candle. Things like that, you're going to start noticing. Now, how do I draw my zigzag? Well, once I identify my peak formation, I say, okay, here's my peak. What am I expecting next day? Hit the stop high drop. Okay, cool. So I mark it, hit the stop high drop. Or it comes right here and it hits the stop. I'm only looking for shorts, in other words, right? Once I identify my peak formation, I'm only looking for shorts. I can take this short, I can take this short. Now I notice 3 hits to the low. Why do I say this? It looks like a reset, that's why I drew it. But theoretically, this came right back into level 3. This is all level 3. This is all level 3 oscillation. Okay? That's why when it did that, 3 hits to the low, you could have gone long right here. Is the stop too big? Yeah, it is. You know, but whatever you're comfortable with. And it just took off 150 pips. Okay? So that's how you would draw your zigzags. Once you identify the peak formation, you know MVV. Oh, I'm sorry, MAA. And that's why you draw the zigzag like that. And if you see a W, and then you're going to go WVV, right? Here's my W pattern, here's my V, here's my V. Right? This is an extra day. Why do I know this is an extra day? Because I'm in this level 2 oscillation. I'm expecting it to go to level 3. So I can take this long, I can take this short, but the better traders do the long side. Because I need to clear this level in order to go to level 3. And that's why I can take an extra day of a V. Okay, how do you copy text without hitting the A and typing the text each time? For example, if I'm here, I double click on it, I click the control button, and I can just copy my text without typing it. right? So for example, I write enter a lot, right? So instead of me typing enter here, I just double click on enter and I move it from here to here. You see? Really easy. Double click, create a double click, click control and move it. And it'll just keep you keep creating a duplicate of itself. Okay, is there a program to copy the screen and some instructions anywhere? I don't know what that means. What are the red dots? The red dots are something that Steve used to teach us from before. They're called scale-ins. He doesn't use that now. I personally use it because I did my homework on it, and I use that as momentum shifts. That's all I use it for. I don't trade off of it. So these little dots are all over the place, but I know when the dot is valid and when the dot is not valid. Okay? It confirms my pattern, and I trade that kind of stuff. So when I see it confirming my railroad track, then I know I'm going to go that way. What else? Is your work available on the forum? Well, now it is, because now it's kind of, you know, you guys are going to actually have this recorded. And then every Sunday, we do a session where we go over levels. And hopefully you guys will be able to join us. It's a free Sunday session. Ray and myself will do the levels. Every other week we kind of shift. And then we get guest presenters. You know, we have swing traders, and, you know, hopefully Ricky will be here soon. And we had Masood a couple of weeks ago, and Kim and Granny and Jim, and there's a whole bunch of them, Gary. And so we have a lot of very experienced people showing how they actually trade. And so you're not by yourself, okay? What time Sunday? Sunday is usually at 6:30 p.m. Eastern. Why is it Eastern? I don't know. Ask Steve, man. Steve is on the Eastern side, so that's why we do it Eastern. Why do you save the picture to send off to Steve? How do you save the picture to send off to Steve? Okay, once you save it, that's a very good question, right? So let's say once I saved my homework here, right? And what do? I right-click. Okay, I'm going to say, you see the word that says send to? And I click compress, it'll form the zip. It'll create the zip for me. It'll zip it, and the zip is the one that I can attach. These folders I cannot attach, but the zip I can attach. Who's the presenter this Sunday? This Sunday we do not have a session. This Sunday we do not have a session. Last Sunday I mentioned that, and I'm going to put it in the forum also. Next Sunday we will have a session. Okay. Mig is better than Duke is. Yeah, that's the right answer. Does MT have a button to capture the chart? Yes, actually you do. MT4 does. So for example, if I want to capture this chart, I right click and I click save as picture. And then once you click save as picture, active workspace, active chart. So let's say, for example, if you have a trade on, you click active chart, it'll show you a little trade window at the bottom also. But if you're doing homework, just click active workspace and click OK. It'll actually save it, and it'll look exactly like this. It'll look exactly like that. Whoops, yeah, like that. Okay, then you'll be able to see all the markings and what actually happened and all that. Where my entries are, notice all of them are in one direction, in line with the market maker trend. Long, long, long. Once I'm in level 3, then I'm looking for shorts, shorts, shorts. It's really simple. I mean, Steve has really given us a real good gift. It's a beautiful gift, and but you have to do the homework, man. If you're not going to do the homework, you're not going to have the confidence in the methodology, and if you don't have the confidence in the methodology, you will not be able to pull these trades. Then you'd be like, oh, I'm going to go long here, I'm going to go short here, I don't know what the hell is going on, I'm all confused. When you start doing the homework, you're like, man, I see it, I know this is what I'm looking for, I know this is what I'm looking for. And if it plays the game the way you want to play it, that's when you actually take the trade. Let's say I'm looking for stop and low rise, and it just starts dropping from here without this stop hunt. I'm like, man, that's not my trade. I'm looking for stop and low rise. And when it does present, that's when you take the trade. So in other words, like poker. Not that I play poker. I've never played poker, but talking to my buddy Bruce, he says, you know, in poker, when you're given a hand, right? You look at the hand and you look at it, you're like, yeah, you know what? This hand is a crappy hand. I'm not going to play it. And you fold. You keep folding until you get a very good hand, then you play. Why? Because when you play a good hand, you have a very good chance of beating the house, right? If you have a crappy hand, you're not going to play it because you're going to lose. So you just keep folding until you actually get a good hand, and then you kill them. Then you're like, you know what? I'm going to kill these guys. I got a good hand. That's when you actually bet the big bucks, like Steve is telling us. Notice I had 3 swipes, right? 1, 2, 3, and then there's your W pattern. Second leg goes below the first leg and closes right back inside. You enter right there. Your stop is literally just the pin. That's the gift, man. Knowing what to do at the extremes. I'm not taking the trade in between. Can I take the trade in between? Yes. I've seen this enough times. I know how to trade these things. But not everybody should, and most newbies cannot and should not. That's why you don't see me normally take these trades in between. Okay? Very seldom I'll do it. I'll do them. If I get up and I miss the move and I'm like, man, that's only push 1, I'm going to take him. Okay? Are the patterns in the forum? No, the patterns are not in the forum. Steve actually talks about these patterns. You know what the best thing to do is? Steve gives you a list of patterns. The best thing is you look at it, and if you want, you can send email to Steve, or or just post it in the forum, or you can just send it to me, whatever. Then we'll be more than happy to help you out with that. You call this homework, but is this what you do when you trading? Yes, 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 yes. That's how you see and you build confidence. When I'm actually trading, if you notice, this is I look at this chart, by the way. It's not like something I just do and then forget. It's on the hard right edge, man. It's marked. I just haven't completed the thing yet because this is like that. You just draw it, bang. That's one level, right? It's all part of level 3 oscillation. But yes, these are charts that are marked up right all the way to the hard right edge. Okay. Do I need indicators to do homework? You can. My TDI is down here. I used to do that when I first started trading. When I first started doing my homework. Let me just quickly show that to you guys. When I first started doing homework, I was using TDI because I was new. So here's the previous homework, right? So on the 15 minutes, I had, I'll show it to you. See, I had it marked. Okay, here's my entry. Here's the scaling. How did I scale in? I had my TDI down here. M patterns. When it crosses, Steve will talk about that. I don't want to jump ahead, but notice he'll talk about these things, and you can use the TDI and you can mark them up as you do your homework. Okay, you're lining it up, and if you don't see a pattern, I write chop. Level 2. Before, I used to mark my levels instead of boxes. I used to mark it with these dashes. Okay, now I'm more, now I know a little bit more about this boxes and stuff like that. So I just kind of like I would draw a box right here. Okay. Good shit. Okay, good. How do you do it? What do you do with resets? What do they tell us? Do you restart the count? Yes, the resets are usually, for example, I'll give you a quick example, and I think my time is up. So I'm going to show you something interesting here for those people who kind of stuck it out to the end, right? So, for example, I am here on the 1 hour chart. Okay, so I'm looking at this level 2 right here. This is May 11th. Okay, so I'm going to go and drop it down to the 15 minutes, May 11th, and I'm right here right now. Okay, so now drop 1. Okay, you would have said this could have been drop 2, this could have been drop here, the big fat W back up here. Here's your, it looks like a reset right up here, right off the 15. You see it? Right? And then you see the move, the shift, and then it drops from there. Right? You can go drop, consolidate, hit the stop again, drop. One more, and then you can start seeing sort of like a head and shoulder pattern. Shoulder, head. It's ugly. It's not clean, right? And that's how you're going to see it on a shorter time frame, on a smaller time frame. So usually on level 2 is where you're going to get your reset. Right? It continues coming down. and then that's how you're gonna. But if you draw it also, the 1 hour superimposed on the 15 minutes, you can actually see them better. All right, but it's actually 1, 2, 3 with a second leg over here. See that? That's the big W pattern with a hammer right to the low. It'll come up one level, it'll reset, and it'll start dropping from here again. Okay, so that's what I'm talking about. So you'll be able to see these things. Usually in level 2, you'll find your reset. But in other words, like Steve was saying, momentum is to the downside. It costs money for them, and they don't want it. You know, with the sentiment already created, they don't want to cost them any money. So they're like, oh, you know what? If your bias is to the short side, I'll make my money, come back, make my money, and then let it drop again in the direction of the sentiment. It costs them no money. They'll sell, sell, sell. At some point, they'll pull it back and book profits. That's all it is. Oh, we are bringing. Okay. Okay. Let's see. I miss how to stick the text to the chart. Oh, just use A. Use A instead of the T, and you'll be good. Okay, just use A instead of the T. If you use A, it'll stick with the chart. If you use T, it's gonna move. Lori, hilarious. Your dog has to go to the bathroom. All right, guys, I'm gonna end over here. If you guys have any other questions, my email. You can find my email in the forum. Just shoot me a couple of emails. I'll be happy to answer them. Catch us on Sunday. You'll learn a lot of stuff. Ray is fantastic with levels, and we'll be happy to show you some of the stuff we know. Okay? All right, Steve.
All right, I think I got it back.
Thank you.
Everybody hear me? Okay. All right, look, and everybody's tired. We went long. Thank you, Carr. Very, very fantastic presentation. That's how you're supposed to do the homework, man. That's how you mark up your charts. All right, so I know you're tired. Go to bed. But tomorrow I want to see a GBP/CHF chart. GBP/CHF. Go back a couple of days, a week, whatever you feel compelled to do. Thanks, Bruce. Mark it up for me, kind of like Carr did. Identify peak formations, levels, market maker trap moves, all that stuff we talked about, all right? Start trying to tie this stuff together in your mind. All right, there's no session this Sunday because you have the recordings for 2 weeks. And the weekend is a good time to spend working on the recordings and getting caught up and then immersing yourself in the live market and watching the charts. All right, thank you, Wayne. You guys ready to get out of here? That's it. GBP, CHF. Go back a few weeks, mark up some charts, send them to my inbox. Veterans, don't send them. I got enough from the newbies. All right, good night, everybody. Thank you. See you tomorrow, 6 o'clock sharp, Eastern Time. Good stuff. Thank you, guys.
Thank you.
Hey, good night, everyone. It was a great class. Appreciate. If anybody has any questions that we can help with, please let us know. Send us an email. Give us a call. We're here for you. Good night, everyone.